In Q1 alone, startups raised over $100 million in disclosed deals, with Fintech once again dominating, while agritech and clean energy startups are quietly gaining traction. Now, to help us make sense of the trends and what they mean for the future of Nigeria's innovation economy, I'm being joined by Boboye Adeniji Oluwafemi, Managing Partner at PELSE Consulting. Many thanks for joining us, Femi.
Thank you for having me, Austin.
All right, let's just get to the issue of the day very quickly. Let's begin with the big picture. Over $100 million raised in first quarter of this year. What does this say about investor confidence in Nigeria right now?
Okay, thank you so much for the question. And I think it's a good thing for people like us to see this happening. And we are sure that as we continue in all of the trajectories that the various actors that are contributing to this current threat, if we continue to sustain what we are doing, it only bodes well for the future of business in Nigeria, especially among startups. I think it's a good thing to read that this is happening, and I'm not particularly surprised. I also am expecting that this can be sustained or should be sustained. I'm also looking forward to even further investment as we continue to move on. I mean, it's the key factors and indicators are there. If you talk about market size, if you talk about market activities, if you talk about all of those things, right? You realize that Nigeria is always in the top, among the top bracket of nations in all of those indices in Africa. And one of the things that Nigeria has as a major advantage over all of these other economies, like South Africa and Egypt, which are the other major countries that have very big and robust economy in themselves, is the fact that we have population advantage over them, right? So that means, and another good thing that we have is our population is predominantly young people. So, and that means learning capacity and trend will constantly evolve. So it's a lot of things to be thankful and be appreciative of, and it actually reinforces hope for young people, especially who are running one business or the other. And also the fact that, the CBN is actually doing a lot better than we currently have in the past. We have more stable monetary policies, and which is very, very good for us. And stability is a critical stuff. And also another thing we also must identify as a critical that could be critical to this is the fact that there's further investment across all levels in infrastructure, not just physical infrastructure as it were, but mainly in training. You see a lot of incubators evolving. You see a lot of workshops evolving where people are able to learn one thing or the other, how to better do businesses, run businesses, run organizations, understand corporate governance, inculcate legal structures, and then begin to see the evolution of consulting firms just like ours that looks at this particular ecosystem. So a lot of factors are contributing to this. So we have more people who are doing businesses better, and all of these things are reinforcing confidence in investors.
Okay, now, as a business strategist, do you think that these capital injections are solving real structural problems or just inflating short-term valuations?
So basically, I wouldn't say it's solving long-term problem, but like I would say it's the right step towards solving a long-term problem, because one of the major problems that you have as an entrepreneur or somebody who's running an enterprise that is at scale, one of the major challenges you have is access to finance. And access to capital is a very critical aspect of running any business. And then One of the things we also see is that we are getting a better understanding of how to assess finance. And a large chunk of that is the fact that we are now having venture capitals that are African-led or African-owned. You have persons of African origin, persons of African interest, running or managing or owning these VCs. And you will see in the last round of investment that was captured in your report, a bulk of them were VCs majorly focusing on African investments or Nigerian-owned businesses. So basically, I wouldn't say it has solved the entire problem that we have, but it's a step in the right direction towards addressing the long-term problem and fixing it.
Okay, now let us just get to some specifics now before we move on. Now, LemFi, for instance, raised about $53 million in January. I wanted to know how they made their pitch. But then, over time, we are seeing a notable tilt towards debt financing. Mansa raised about $7 million in debt. Rivi also did. Now, does this suggest a maturing ecosystem or risk aversion from equity investors?
So, exactly, like I said earlier on, I said the fact that we have more consulting firms, in the past, majorly, businesses do not encourage or patronize professionals, as it were, that can help them, do a proper structuring, finance structuring that's better for them or that better fits their business narratives or direction. Because the reality of one business or the other varies, and it is not always the same. And all these things are not cast in stone. Because there are a lot of variables you consider when you're trying to assess finance. What route to go might be a function of several factors that vary from time to time, right? And that is where what you see, the majority of these businesses, if you check, they are working with a consulting firm or a financial expert that is helping them to structure the ways to manage, to access and manage this funding. So basically, that is where the improvement in the ecosystem is coming up. So you are seeing many professionals who are many investors, investment bankers, retiring, serving as a consultant for all of these businesses and helping, and they're working with consultants with experience with years of experience in consulting. And do not forget also the big consulting agencies are also still playing prominent roles in supporting these businesses. So basically, I think it's more of the availability of competence and expertise that is required for these businesses to run in a more sustainable, efficient finances as it's a major win for practitioners in that space, because we are now seeing that more of these businesses understand that, okay, for example, we are having a conversation with somebody, they need to understand at what point do I need debt, at what point do I need an equity investment. So people need to understand all of those things and the variables that applies. So more and more businesses are now embracing this, and this is now giving them the opportunity to understand the finance landscape and how to better take advantage of it.
All right, let's move on very quickly now because of time. Now, Fintech is still dominating. Are we nearing saturation, or is the sector still ripe for disruption?
I will say to you without any outer doubt that we are far away from where we can and we should be. Payments, because of increased trade, population, young people coming up, consumer goods, people need to buy things. And then do not forget, we have a lot of JAPA, and African trade, the AFTA agreement, trade agreements, turning Africa to one big market. So payment is in fact, we are just even scratching the surface, because majorly there are still some challenges with payments. There is a lot of, though some of them are politically, put in place that will require some level of advocacy at that level, but law of demand and supply will definitely push the hand of our politicians when the time is right, basically. But what I can say is that we are not even near saturation, because we of course it's normal, it's natural for an evolving economy for payments to be a major dominant force. So yes, it is going to be for now. And we are seeing I think, as you can see, a lot of these guys are just raising these new funds. They were not there 5-7 years ago, maybe, but now they are pushing a new frontier for payment innovation in Africa.
Okay, now your firm's PELSE Consulting works with a range of early stage ventures and others. Okay, are Nigerian startups today more bankable than they were 5 years ago? I know you mentioned that in passing. So what are your thoughts really?
So basically, like you said, majorly, one of the things we've seen, when you work with, from my experience, when somebody has a vision or is running a business and they begin to work with professionals, consultants that can provide the necessary guidance to put the necessary structures and systems in place that enable them to build right and build an organization that is scalable, right? And one of the things that we also must mention is that these investments are coming because majority of the problems we see in Africa, in Nigeria, are similar to some of the problems you have in other parts of Africa. So what you see is that some of our inventions, they are exportable. These are been the message that we've been passing across to some of these businesses that do not build for just Nigeria, because majority of these challenges, and because one of the things we are talking about is that a Nigerian solution for a global audience, and that should be the goal. And that is what majority of these entrepreneurs, innovators are currently doing. From our experience, work with SMEs, helping them to get startup funds, secure seed investment, we see many of them going about, building on that success to even access further funds, have been able to move from one level to the other. So basically, I think when you have the right mix of somebody who is committed, who has the skills and the vision, and then they are able to work with people to help them put necessary structures and systems in place and guidance, sky can actually may not be their limit, because then you have a powerful combo that's required to win the market space.
Okay, let's talk about regulatory uncertainty now. I want to get from your advisory perspectives, what policies would better support tech-driven startups?
So I think there's Nigerian Startup Act. I think that was during the last administration. I don't know because majority of these things, right, it's not that we don't have the policy. One of the things we've been advocating and having conversation with several industry stakeholders is on some of these policies. How do we begin to develop an implementation plan of these policies? Because it is good to have policy, but it's best when this policy has a clear roadmap of implementation. How do we begin to create a timeline and say, this is how we want to drive the implementation in the next 2, 3, 5 years, so that within this ecosystem, these are the traits and common traits we want to see among this industry sector or that industry sector. And then using the available framework, and by the time we are test running these things, we then begin to see areas where this policy can be reviewed or revised. But when we have a policy that is not even operationalized, then how do we even begin to query or add for more? Because the essence of asking for more is to see you are improving practice. But if you have a policy that is not operationalized, how then do you even go about advocating for a better policy when what you have has not been effectively utilized to identify what works, what did not work, why, and then how can you improve it? So basically, I think it's conversation that industry stakeholders must have and say, from all of these policies that we have for various sectors, as an ecosystem, how do we operationalize and make things better as we go on?
Okay, very succinct, Femi. Now, as we round off now very quickly in just 1 minute, your final word. Its second quarter is almost over, that is June. But looking ahead, what do we expect to see at the end of the second quarter and third quarter? What sectors or what signals will you be watching closely?
So basically, as we about coming to the end of the second quarter, we are expecting that one of the good things that has happened so far is the marginal gains we have recorded as a nation in terms of our inflation, and which is a very good one, because and then some level of stability. So basically, in the forex market. So if we can sustain this, I think it's a good one, because every investor, one of the things they want to see is a stable market. When there's stability in the market, it's not, sometimes people think it's about whether currency is high or low. Why that is a good barometer, it doesn't speak the entire, it doesn't paint the entire picture. Stability is also very key, and that stability is very, very essential. We expect that there could be some level of disruption in terms of energy and power supply, owing to the regional crisis that we are having in the Middle East and things like that. We hope that there will be some level of stability as well, and some level of peace will return there, and that will also help bring that, because the energy costs globally, which we are now living in a global world, the level of interconnectedness is high. So it's very essential that among several parameters that we also want to look at, the weather may affect the issue of flood, may affect agricultural produce. We expect and we hope that governments can invest in appropriate infrastructure to ensure that there's limitation in the amount of damage suffered, which might have adverse on the foods commodity in the market. All right, Femi. So which can also help in controlling inflation. So
all right, thank you so much. Thank you so much. We have been speaking with Femi Boboye, managing partner of PELSE Consulting. Thanks for your insights on the show today.
Thank you so much for having me. It's a pleasure to be here.
All right, as Nigeria startups defy the odds to raise over $100 million in just one quarter, the message is clear. Despite the headwinds, investor interest in innovation remains strong. From fintech and energy to agritech and beyond, the momentum is shifting towards startups that not only solve real problems but also offer scalable, sustainable growth. As our guest, Boboye Adeniji, rightly pointed out, capital is important, but so is structure, regulation, and local participation. Well, that's it on the show for today. My name is Justin Akadonye. Many thanks for being there.